Let's go! There are a lot of exciting and important developments to cover today regarding Bitcoin and crypto in general. I'll be going over the large amounts of institutional buying that went on throughout the recent dip, some price targets that those institutions are predicting, and a couple of updates related to the future of crypto regulation in the United States. I will also be explaining the FUD that was circulating about a double spend and why it is nothing to worry about. If you did not take advantage of the recent dip as an opportunity to pick up Bitcoin, Ethereum, or some other high quality altcoins, that is okay, because at the end of this video I will be sharing when the next dip is likely to occur, so you can be prepared for it. While market sentiment may have appeared bearish over the recent dip, on-chain data reveals to us the true story of what was actually going on. This graph, provided by Glassnode, shows us the number of Bitcoin whales, which are defined as wallets with 1,000 or more Bitcoin, has been sharply increasing recently. This shows that the wealthiest individuals and institutions out there are as certain as ever that Bitcoin is going to continue going up in the future, and they are willing to continue deploying large amounts of their capital whenever they have the opportunity to buy at a discount. And while some of these Bitcoin whales are anonymous individuals or groups, a few of them are public entities such as MicroStrategy and Grayscale, both of which aggressively bought the dip. MicroStrategy scooped up another 314 Bitcoin for $10 million at an average price of $31,808 per coin. This recent addition brought the company's total to an impressive 70,784,000 Bitcoin. While $10 million is an impressive investment, when compared to Grayscale's recent purchases, it looks tiny. Over the last 7 days, the publicly traded trust added 29,598 Bitcoin to their current holdings. In doing so, the trust broke its previous asset raising record yet again through a total investment of $1.3 billion in a single week. On a side note, recent filings by Grayscale are hinting that they may be opening up additional crypto trusts for coins such as Tezos and Chainlink. This would of course be very bullish for those two coins and any others that may be added to the public trust, because they then become available to a much wider array of prospective institutional investors. This actually brings me to my next point, and that is the fact that there is a rapidly growing group of potential corporate investors who want to learn how to invest portions of their company funds in Bitcoin. Michael Saylor, who is arguably the biggest Bitcoin bull in the corporate world, is stepping in to fill the knowledge gap that these future Bitcoin buyers are facing. Saylor announced on CNBC that he will be holding a digital conference to educate thousands of executives, officers, directors, and advisors of corporations on how to add Bitcoin to their balance sheet. This is insanely bullish. We have seen how much having MicroStrategy, Square, and a small number of other companies, they have already helped to increase Bitcoin's price so much. Now imagine what will happen when we go from a current handful of corporations to hundreds or even thousands trying to buy up enough Bitcoin to fulfill their needs. As I have covered in previous videos, we are already in a Bitcoin supply crisis, and this is only going to speed up the rate at which supply decreases. All of this aggressive buying shows us that large investors are bullish, so let's take a look at the price targets they are predicting. To start off with, 100,000 is already a popular target among multiple institutional investors. For example, one of the most renowned banks in the world, JP Morgan & Chase, believes that $146,000 per Bitcoin is actually a sustainable target to reach by the end of this year. Similarly, Pantera Capital, a large investment firm and hedge fund, believes that Bitcoin can reach $115,000 before August the 1st. They arrive at this prediction in part by utilizing the stock-to-flow model, which looks at halving as the events that begin the crypto bull cycles. A recent survey by Bitwise Research shows us that this is not just institutions who are warming up to investing in crypto. The survey revealed that more and more financial advisors have started purchasing digital assets such as Bitcoin for their clients. The actual percent is still relatively low, but the growth rate is impressive. Since 2019's survey result, the percentage of financial advisors who allocate crypto in their clients' accounts rose by more than 50% from 6.3% to 9.4%. If you are investing in Bitcoin or crypto in general right now, then this is exciting news because it means that we are all early investors. If less than 10% of financial advisors' clients are allocating portions of their portfolio to digital assets, then there's a lot of room from the number of retail investors to continue growing. Now, let's move on to some news about the future of crypto regulation in the United States. Even if you do not reside in the US, it is important to pay attention to the events occurring there because they have strong effects on the overall markets. Contrary to what you may have heard in the last week, there is not going to be an extreme crackdown on Bitcoin and other cryptocurrencies. There were a number of headlines circulating recently about a speech given by Janet Yellen, Joe Biden's pick for Treasury Secretary. In that speech, she made a comment that she was concerned about the use of cryptocurrency for criminal purposes. Right away, multiple news sources jumped on this as an opportunity to spread FUD, saying that serious restrictions were coming. However, this was not what Yellen was trying to communicate in her speech. She clarified her stance in a written response to the US Senate Finance Committee. In her response, she wrote that cryptocurrencies have benefits that need to be explored and that the emerging technology has the potential to improve the efficiency of the financial system. Her stance on the matter can be summed up from this part that reads, I think we need to look closely at how to encourage their use for legitimate activities while curtailing their use for malign and illegal activities. In case that is not clear, this is bullish. It does not mean that the government wants to get rid of crypto, but that they just want to try to reduce anything shady going on with it. Along with Yellen being selected to her new post and Gary Gensler being selected as the SEC chairman, Chris Brummer is rumored to be Biden's pick as the chairman of the Commodity Future Trading Commission. If this rumor is fulfilled, it would mean that 3 of the most important regulatory positions in the US government would be held by individuals with extensive knowledge of cryptocurrency and blockchain technology. Brummer has already testified in front of the CFTC multiple times on matters concerning cryptocurrencies and CBDCs. He would be a very well-rounded pick for the position and would likely help to create a regulatory environment in which crypto could thrive and start to fulfill its true potential. Now it's time to address yet another major source of uncertainty in the crypto markets, and that is the claim that a double spend occurred. A double spend would mean that the same coins were sent to 2 different addresses, in theory, increasing the total Bitcoin supply. Obviously, if this happened, it would be extremely bad as it would destroy Bitcoin scarcity. Luckily, this did not happen and the claims originated from a lack of knowledge about how Bitcoin transactions are confirmed. What actually happened is that 2 transactions involving the same coins were recorded in different blocks. This can happen when separate mining pools mine the same block simultaneously. This creates 2 versions of events and splits the history of the blockchain. However, this is not a problem because miners who confirm the subsequent blocks have to choose only one of those duplicate blocks to build off of. This causes only one of those transactions involving the coins in questions to be considered valid, meaning the second address they were sent to can never spend them. This is known as a chain reorganization and is a natural part of the creation of the blockchain. So, as you can see by what I have shared today, there's a lot of bullish stuff going on, but the events that news sources have decided to focus on are a few negative events that were blown out of proportion. While this does not necessarily mean that big buyers are trying to get retail investors to sell, that is definitely a possible scenario. It is inevitable that when scary negative headlines hit the news, some investors will be frightened into selling, which decreases price and allows the whales I mentioned at the start of the video to continue buying at lower costs. This is why it is essential to do your own research and understand what is going on behind the scenes rather than just following major news sources. This is also why I want to share when there is likely to be another dip in the future. Every year, in the period leading up to the Chinese New Year, Bitcoin has consistently seen increased volatility and large dips in price. In this chart, you can see the size of the dips that have occurred each year since 2017. This year, the Chinese New Year will take place on February the 12th, but the celebrations can last several days. Why does this cause Bitcoin's price to fluctuate? There are a couple of reasons. First of all, a large portion of the Bitcoin market makers reside in China, and they will shut down operations for 3 to 5 days to celebrate. Market makers provide a variety of services, but one of their primary functions is to increase liquidity in the markets. When the liquidity is removed, larger price swings become more common. That contributes to the volatility, but what about the price crashes? Well, it is actually traditional to give out packets stuffed with cash during the holiday, and one way people get the cash for this tradition is by selling off assets such as Bitcoin. Finally, another factor in the lack of liquidity and increased volatility is that Chinese OTC desks that facilitate larger orders are closed for the holiday. Now you know what to expect: increased volatility and dips within the coming weeks, and you also know the reason that they will be occurring. Make sure to remember this because it is likely that there will be stories fabricated in an attempt to add bearish narratives to the dip when in reality, this is something that has been occurring regularly for several years in a row. I hope that the information in this video has helped you to understand some of the reasons behind these Bitcoin dips. If you enjoyed this video, make sure to subscribe right now, watch the video popping up at the middle of this video right now, and I will see you right there.